Good morning, and celebrations continue across the country as well as in our ET Now studios. The country, people have been thronging the streets to share their devotion and partake in festivities as the countdown to Dussehra tomorrow kicks off already. It's day 9 of Navratri as well, ahead of Dussehra, which clearly symbolizes the death of evil and the victory of good. Pandals are decked up for the D-Day all across the country. As you can see, visuals from all over. People have been sharing their festivities, and of course, we have a special lineup as well for you to partake in all the festivities in case you've missed it. And more reason to rejoice for India.
Yeah, the amazing cricket match. India ended their 2-decade losing drought with New Zealand, Nikunj.
Frankly, for me, I am thinking that, Dussehra is important, but if India wins the World Cup, then in the month of November, we'll have 2 Diwalis.
Yeah, 100%.
So I'm actually looking forward to 2 Diwalis in the month of November, rather than, just focusing on, what happened last night. Because look, I mean, India is in a terrific form. Team India is, in a sense, really the top of the league. It's unbelievable the ease with which they're handling pressure. Virat Kohli, back-to-back 1 century, almost 1 more century. I'm not a big cricket buff, but yes, Cricket World Cup is something which you don't want to miss. So yeah, just been incredible to see that how each Indian team player is performing. They did not have Pandya. They opted with a different kind of team 11, and that also has really fired full cylinders.
Yeah, it has. Even the fog couldn't stop them, could it? But let's quickly talk about the markets. They definitely have been fogged out a little bit off late. It's been range-bound with a negative bias, and all focus once again has actually moved to the way the global markets have been shaping up. And we've somewhat been falling prey to that. Having said that, we are down for another week. In the week gone by, this one, remember, is going to be a truncated one, with tomorrow being a trading off. And we did manage to snap that 2-week off gains that we had been steady holding on to. The Nifty Bank, Nikunj, I guess that's where all the focus is, right? Because that starkly underperformed. Lots of earnings, and today we'll be reacting to ICICI Bank and Kotak as well.
So Ayesha, unlike what everybody thought, that market in the short, banks will make a comeback largely because of endorsement when it comes to solidification of quarterly numbers. I think the bank Nifty is in a state of limbo. And whether it is rate sensitives or high beta names, typically financials, they tend to underperform when the layer of the global market is not that strong. So I just want to go back to that same point once again, that you look at the layer of the global market, and which is that crude, bond yields at 5%, the handover from US markets on Friday to this Monday is not that encouraging. So the big cross continues to be the global market, and you're going through that phase where you got to be asking yourself that, is it really worth it? What is cheap in this market? Select banks and some pharma names. Rest of the market is not exactly very cheap. PSU stocks are expensive. Defense stocks are expensive. FMCG stocks are expensive. IT is not delivering. So the options to just buy and put fresh money to work in this market is limited. Global cues are not that strong and supportive. Reliance, HDFC Bank, some of the heavyweights are just not, jiving very well. So I think you're going through that phase of the market where you may want to just ask yourself why and how much before you are committing to fresh capital. It is not a market where you can really identify a lot of momentum also in individual names. So maybe if you're a trader, take a back seat. Maybe you're an investor. Before you deploy fresh capital, ask yourself why. Wait for that bargain, because the global setup is such that sooner than later, I think you are going to be getting, better entry points. That's my point.
There's no rush looking at the global screen also, and also that you've got earnings to digest. Q2 is a critical one.
Yeah, so don't be in a hurry to sell just because what's happening in this rate.
And don't be in a hurry to buy either.
Exactly.
Yeah.
So sometimes no action is a good action. Yeah. So I think we are in that phase of the market where you got to say yourself, okay, what do I do then in the month of November?
Sit on the sidelines. Enjoy cricket.
Enjoy cricket.
And the
Dussehra, there is Diwali.
Yeah.
Watch ET Now.
Exactly.
Enjoy our programming. So there are a lot of things to do. But it's not a market where I think the experience of, you may not be rewarded proportionally to the kind of effort you're putting in, because that is the market setup you are in.
Okay, having said that, yes, banks will steal the show. It was a busy weekend as well. because you had heavyweights come out with their quarterly numbers. So quick review of Kotak Bank's numbers as well as ICICI Bank, and Kotak was largely in line with what the street was penciling in. Remember, we were going in with expectations that this time around their margins would decline, and that's exactly what happened. You had the CASA ratio as well on a sequential basis that declined, and their overall asset quality did see a little bit of deterioration on a sequential basis. Jefferies has downgraded it to hold from buy. CLSA's got an outperform rating. They slashed the target price though. And then you also have ICICI Bank, which came out with a strong set of numbers. NII profits rose. The loan growth was pretty strong though, and provisions as well came in lower. And then, of course, there was the big news to digest with respect to Kotak Bank, with now the former CEO of Barclays, Ashok Vaswani, now taking the hot seat as the MD and CEO.
I think that is what the street is going to react to first today, right?
News.
And I don't expect the market reaction in the short term is going to be a very, kind one.
Yeah.
Okay, let's break it up. From last 1 year, there was speculation that there were 2 internal candidates and there was 1 external candidate. The choice of an external candidate, so the bank had given 3 names to RBI. RBI ultimately gave the final verdict or the final decision. The question you would ask yourself is that why there is no internal candidate and why an external candidate? So Kotak Mahindra Bank, in a sense, is a bank which is built on trust, great risk management, supreme customer satisfaction, and great adaptation of technology. Can Mr. Vaswani really take it forward? And was there no one internally which could have really taken the baton from Mr. Kotak? So in the near term, we've seen that even a bank like HDFC Bank has suffered. Markets know that the CEO at the top matters. A case in point here is the Chanda Kochhar era versus the Chanda Kochhar era for ICICI Bank versus the versus Mr. Bakshi's era. So the CEO and the managing director of a bank, irrespective of what the lending practices are, does matter. So now markets would be curious, some would say anxious, to understand that how the migration would move. Uday Kotak has built a franchise, an unforgettable franchise from an unknown franchise to an unforgettable franchise. Can Mr. Vaswani do the justice to him? And that will be answered in due course of time. And that, in a sense, will inject this extra element of uncertainty. Both in terms of the FI positioning and also in terms of market positioning, the stock is not really in any kind of a momentum groove. So while markets and institutional investors will take their time to digest, in the near term, I think Kotak Mahindra Bank, the underperformance, I think will just become more and more stark and more real. However, I don't expect a very sharpish kind of a reaction simply because the stock has become cheap. It is trading at valuations which are pre-IL&FS. And then, so I think the sheer valuation and the sheer underperformance in Kotak Mahindra Bank, I think in a sense, will restrict the downside. But everyone thought that it's going to be an internal candidate, and that internal candidate will just mark continuity, and that whole concern of succession planning would be over. Now markets would say, okay, we're not saying no, but we need to examine the new external candidate. And then the question is that why was the choice of an internal candidate really rejected? These are questions which are genuine questions. Time will answer. Can Mr. Vaswani make Kotak global? That's the experience he comes with. Because ultimately, Mr. Kotak has chosen somebody who understands his DNA, who understands his lending culture. But markets will take some time before that convince. So in the interim, the stock which is underperforming will continue to underperform. And when you see delivery coming out in next 2, 3, 4 quarters, that's the time I guess you would actually see the market revisiting this whole handover thesis.
Yeah, absolutely. Although Uday Kotak, of course, is extremely enthused by Ashok Vaswani's appointment, saying that, he's a global banking leader with a proven track record of building and growing businesses at international scale and has successfully steered organizations to greater heights, and that he's confident that Ashok Vaswani is going to accelerate change and drive growth at Kotak as well. In fact, Deepak Gupta also, stating that they welcome Ashok Vaswani into the family. He brings with him values and experience that align with Kotak's vision to transform into a tech-enabled, customer-centric financial institution for the future. So this, of course, is going to be one of the key stocks to look out for. But ICICI Bank, almost batting like Virat Kohli.
Yeah, but from a market standpoint, whatever ICICI Bank is actually doing is something which you're aware of. Virat Kohli is expected to take care of Indian cricket team, whether it is collapse or whether it is a run chase, and that is what I think ICICI Bank
today. Yeah.
So it is something which was expected. The NIMs in a sense was slightly down, but I think there is a bit of a cyclicality there. The credit growth on that kind of a large base is in late teens. So fantastic set of numbers, but the stock has been a ranked outperformer. These stocks, the numbers will only ensure that the continuity and the big picture argument for banks is actually intact. Now, could there be a case where money moves out of HDFC Bank? Money moves out of Kotak Bank. It has already moved out of HDFC Bank. It will migrate really back into ICICI Bank, which I think is already at play, and I think it may actually happen more. My only thing is that in the near term, if money moves out of Kotak Mahindra Bank, which it will, where will it go? Will it go back to HDFC Bank, which again has the same issues in terms of 2 or 3 quarters more of subdued earnings? Could it come back to ICICI Bank? Or could it go back to something like IndusInd Bank and Axis Bank, because they have a very different proposition in terms of what they have to offer? By the way, I think, Kunal, IndusInd Bank is at a 52-week high?
Yes, it is.
There you go. I mean, here we are talking about banks being in a limbo, but I think IndusInd Bank has done rather well for itself. So you will actually see rotation.
Some of the smaller ones also.
Yes.
We'll talk about that.
You will see rotation.
Yeah.
I think with these numbers and with the Kotak news, I think you will see some rotation.
Okay. In case you're wondering, this is a truncated week. We've kick-started the festive season, with tomorrow being a trading off for the Shera. No, lots of earnings. You've got Tech Mahindra, you've got Axis Bank coming out on the 25th, that's day after. There's Asian Paints, DRL, Maruti, SBI Life. A lot of small numbers and a lot of global earnings as well, especially from the tech giants. You've got Meta, Intel, Amazon, Microsoft, all coming out with their numbers this week. But let me quickly take it across to Vinny before we bring on board our chartists to get in a sense of what the global commentary has been like over the weekend. Vinny?
So absolutely, a lot of commentary coming in from Fed side and Fed presidents from Cleveland and other cities as well. When you look up the Fed president Messrs from Cleveland is highlighting in terms of how the rates are actually near at or near the peak of the interest rate target. Furthermore, they're saying that, seems like the outlook for the central bank interest rate policy still leans more towards another increase that we could see coming in as well. With noting amid the current economic uncertainties, now it's time for policymakers to make a move that is nimble as well. So, but she's still indicating maybe they could see one more rate hike coming in, and the decision that will be taking place next week. So yes, keeping an eye out on that one as well. Other than that, in terms of, we have another commentary that is coming in from Fed's Bostic, who is talking about they think that they aren't going to see a recession coming in. They believe that inflation will get to the 2% mark and Fed could start cutting rates in 2024. They do not think, that they will be cutting rates before the mid of 2024, but maybe the second half of 2024 is where we could see rate cuts coming in as well. Fed's Harker is also highlighting in terms of the US job market that are remaining surprisingly strong. Economy is quite remarkable and resilient. That's the word that is coming in from Harker as well. Lastly, we have commentary that is coming in from Peter Schiff. This one is more on the bond yield side, specifically in terms of the Japan's bond yield as well. Firstly, they're saying that the 30-year yield in the US is at 5.12%, while the 10-year Japan government bond yield is at 0.83%. Now, as such, it looks small, but for Japan, it's a very big number because normally it was around that 0% mark. So that for Japan sounds, is quite high when you look at it in terms of the Japanese government bond yield. And that is a huge problem that he seems to be highlighting in terms of the treasuries that's shaping up and the dollar as well going forward as well. Other than that, in terms of the national debt in the US, he said that it's already at unsustainable levels. Even if the interest rate is at 5% by the end of 2025, if not sooner, the debt will rise to $40 trillion and 5% of that is around $2 trillion as well. So that is what a main highlight he is coming and highlighting in terms of the national debt as well. That's the commentary coming in.
All right, thanks so much for giving us that roundup as to what exactly the global commentary is. But let's put the spotlight then on the big news within the banking space. We've got Rahul Malani, who's joining in from Sharekhan by BNP Paribas to give us a better view. Rahul, thanks so much for taking time out. Let's just get in a sense as to how the street is going to react to this. Do you think the biggest question mark, as we were discussing earlier this morning, will be why an internal candidate was rejected to take the top spot?
First of all, good morning. So, yes, the expectation was for the internal candidate, but as you say, they have appointed an external candidate who has a strong, proven track record of building and growing the group business at scale. I don't think there would be any knee-jerk reaction on the stock. The new MD CEO has been coming with good credentials, and he has earlier headed the Barclays UK and the cities Asia Pacific, and has a proven track record. Also, he's coming with a strong legacy and bringing expertise from the fintech, which fits the bank's strategy. So, yes, expectation was for the internal candidate, but the candidate which they have appointed has a strong potential for to now the Kotak Bank in line with their strategy which they are going.
Now, what happens to the market because of this this entire change of guard? Because markets were expecting that there would be an internal candidate. There is an external candidate. So, do you think in the interim that, in a sense, could just keep the stock price subdued?
See, basically, I believe that it all depends upon how the transition happens, because existing MD and CEO, Mr. Deepak Gupta, would retire on is liable to retire on 1st November, and he would likely apply for an extension to the RBI. And in this case, a smooth transition would be watch out for the street, and I don't expect any knee-jerk reaction on this versus the internal versus the external debate.
Okay. If the stock falls 5, 10, 15% while markets will wait for the entire transition, do you think then Kotak Bank becomes a buy? Should one use big declines, bad days to buy into the stock?
Yeah, we are positive on Kotak Bank, and the valuation also providing good support now, at currently trading at 2.6 times and 2.3 times its core book value estimates. And we believe the bank is providing one of the best key metrics in covering across the sector, despite some higher accelerated NIM pressure. But overall, we remain positive on the bank, and if any of the knee-jerk reaction is provided by the market, we are advising to buy on the same.
So Rahul, what is your pecking order when it comes to banks? And I'm going to keep it market cap or agnostic, because there's too much divergence in the way A, the earnings have panned out, and B, of course, how the stock prices have moved.
So in the large private banks, we like ICICI Bank and Kotak Bank, and mid-private banks, we like IndusInd Bank and Federal Bank, and PSUs, we like SBI and Bank of India.
All right, Rahul, thanks so much for taking time out and joining in and giving us your assessment of all the news within the banking space. That's the Nifty implied open, by the way, on the Gift Nifty, down about 50 points. But time to connect with our chartists to find out levels that they're tracking, as well as their views on the banking space. Naresh Mirani joining in, and Kunal Bothra right here with us in our studios. Kunal, why don't we start off with talking about that, shift in allocation within some of the large private banks. Where is it that you're expecting momentum?
So, good morning, Avanne. I'm expecting momentum to be, in the very similar kind of names. For example, IndusInd Bank has been one of the better performers from the private sector banking names. Axis Bank has been amongst the top two candidates, except for the last couple of days of selling. I think the stock has been a lot more resilient at the 950 to 1000 odd mark broadly for Axis Bank. The two underperformers in the banking names and the private sector banking heavyweights, of course, in fact, three are HDFC Bank, ICICI Bank and Kotak Bank. I would probably expect that maybe the sell-off in HDFC Bank and ICICI Bank could be behind, and we may expect these stocks to at least stabilize, if not fall, further from current levels. So I believe that leaves with possibly Kotak Bank maybe underperforming for some more time. But I would still believe IndusInd Bank looks to be the strongest name. The stock has been a relative outperformer with respect to many of the other peers, even in the last 3 to 6 months broadly.
Okay, IndusInd Bank, the top choice from Kunal. Naresh, hi, good morning. What is your take on the Nifty? Another week of underperformance, weak handover from the globe. Is it going to be a red day for us, given that it's a truncated week and expiry as well to deal with?
So expecting the sideways move to continue, and we would be on the fourth month wherein we are at the same place. So the last time we were around this 19,500, 700 mark. We first crossed it in July of this year. So July, August, September and October, we are just at the same place. So we've seen that flip towards 20,200, 19,200 on the lower end, but we've still managed to be in this range only most of the time. So for now, 19,300 is the last bottom. 19,200 is the previous bottom. Till the time we don't break that, the trend remains to be sideways. On the upside, similarly, 20,300 is the upper band. In the near term, once we start crossing 19,800, that would be an indication of positiveness. So for now, the momentum is more on the mid cap and the small cap side. There are stock specific actions happening more on the broader market. Index continues to be in this struggling band of 19,300 to 800. So not expecting much even today. We could expect some bit of a recovery from that 19,450, 500 mark, but tough to take a larger recovery from here.
Let's nail it down to some individual stock recommendations, kickstarting a truncated but very critical week. So Kunal, what's on your radar?
So I'll go with two buy calls. The first one is from the auto pack. Escorts is something which looks attractive. The stock has come back towards a very attractive risk reward at 3,200 odd levels. So would suggest a buy with a target of 3,400. Stop loss at 3,180. And MTAR Tech is something which also has popped up on the intraday charts. The stock confirming a triangular pattern breakout on the intraday time frame. So would suggest a buy with a target of 2,900. Stop loss at 2,688.
Right. Naresh, what about your stocks?
So playing a little defensive, the first is a bet on buy on Sun Pharma. The stock has been in a range of 1100, 1120 on the downside, 1160, 1180 on the upside. Setting up for a breakout. The previous high around this band was back in 2015. So could be a long-term breakout and finally a leadership move. So preempting that move with a small stop loss, a stop loss at 1120, target price of 1250. Second is a buy on IndusInd Bank, which has continued to remain in a relative strength compared to the rest of the banking names. Knocking at that 52-week highs around that 1470, 1480 mark. It has attempted that almost 4 to 5 times in the last few weeks. This could break out in the short term and head up towards 1600, stop loss at 1425.
Okay, there you have it. Get down all of those top recommendations from our charters. Meantime, let's bring on board Anisha into our studios to talk about some individual stocks then. And the first one that we're highlighting is Paytm. Chatting about the numbers, the brokerage view, as well as the management saying that they are going to focus on growth down the line and the payments business will see some tailwinds in the coming quarters.
Well, yes, and brokerages and street are expected to take a heart from all those, comments coming in from the management. Now, in terms of the performance, there was an improvement on a sequential basis. Yes, the company continued to report losses to the tune of around 290 crore on the bottom line. But at least on a quarter-on-quarter basis, there has been improvement, 360 crore what the company had delivered last quarter. So an improvement from there. Now, in terms of the GMV, we have seen an improvement of gross merchandise value, an improvement of almost 11% on a sequential basis. The loan disbursement pace was also quite strong, a growth of almost 9% on a sequential basis. Now, numbers are largely in line with expectation, but going forward, the street is expecting that the EBITDA break-even that they were earlier talking about will happen in FY25. And even in terms of the EBITDA number, they're expecting a number of almost 790 crore as far as Motilal Oswal is concerned versus 780 crore. We also have CLSA, which has written a note. They have increased the target price to 1200 versus 1050 that they had put in earlier. They are saying there's a new partner on board. The take rate is strong as well. The new soundbox system has been working well for them. So a lot of tailwinds, as you pointed out. Let's see whether the stock reacts to that tailwind or not, Nikunj, because this stock has done well. And of course, recently a lot of brokerage notes talking positively.
So Anisha, exactly let's say a year ago, everybody was in a sense nervous, some were confused, and the general view on Paytm exactly a year ago when anchor investors were selling, I think was quite bearish. So it's just been a great year, great comeback year for Paytm, 86% higher from where it had hit earlier this year. I think is absolutely incredible. What changed? To put things in context here, they defined the path to profitability. That is something which made some of the consumer tech and fintech stocks excited. So that is something which markets are assuming that they will continue to walk towards the path to profitability, and that is something which the management has not changed. Now, there are 2 or 3 things which I think are important for Paytm. For better risk management or better disclosure, they actually had slowed down their entire lending business. Is that business ready to come back again? Will they put metal to the pedal? And in last 2 quarters, could we see a uptick coming back? So that in a sense really becomes the big delta for Paytm, because while the UPI business is doing well, it is really the meat for them is coming really from the lending business, which the management had guided that they would slow it down. Can they bring it back? And if they're able to bring it back with some of the new partnerships, then we are looking at not a major upgrade, but a decent upgrade coming in for numbers for Paytm in the near term for next 2 or 3 quarters. So that really could be the trigger. But barring that, I think business as usual. Barring that, I think markets know that which way things are moving. The outlook is much more stable. Brokerages, they like to own the stock now. I mean, the most consensus target on Paytm now, according to Bloomberg estimates, I think is something like 1100 rupees plus. So it is still trading below its consensus price. But for me, I think what is important now, just like they defined that they wanted to go easy on the risk management business, the lending business, can they get the mojo back there?
But the big dhamaka earnings this morning, Anisha, is Poonawalla FinCorp. Excellent numbers.
Oh, well, yes, part of it though was factored in because they had come out with a provisional update. So on the AUM basis, the kind of growth that we have seen, 54% year on year and 14% sequential growth, is of course something that the street knew. But you also have disbursements which have gone up a solid 150% year on year. You also have the asset quality that continues to be very strong. In fact, the GS3 ratio is just 1.4%. The PCR is quite strong, and the restructured book as of September 23 also declined to 0.4% of the asset under management. Remember, it is one of those organizations which has been using the digital technology very well to kind of increase their presence as well. So they've started the online lending in terms of personal loan as well. They're calling it the instant loans, so that's also expected to support the sentiment going forward. It operates in the higher ticket personal loans, so they're not worried about the stress. And if you look at the management commentary, they've guided that NIMs will continue to be above 10%. There might be a bit of moderation as we have seen across the sector, but 10% is something that they'll hold on to. The legacy book has been something which they have been kind of tapering down, and that's expected to continue as well. The target price on the street from the likes of Motilal Oswal stands at around 450, and the kind of growth that they're penciling in for the next 3 to 4 years is an AUM growth of as much as 40 to 50%. So solid growth this time, and Nikunj, the prospects also remain quite strong, at least as far as the brokerage view is concerned.
So Nisha, I mean, look, it's a new kid on the block, if I may say so, which in a sense has been backed by the Poonawalla family. It's a very strong family, and we pretty much know that, the kind of, uptake they've got post-COVID in terms of the vaccine business. Is Poonawalla Finance now growing at a rate which is enviable? But are they taking risk just in order to grow their balance sheet? Very difficult to fathom that. I mean, their NIMs are one of the highest, their growth is one of the highest, and the valuations are clearly not really rich if I compare the other NBFCs also. So they've got growth on their side, they've got management backing on their side, and they also have this whole culture of using digital as well as the inorganic piece. So what Poonawalla FinCorp actually was versus where it is versus where it will be now, I think is something which is dramatically different. But the stock has seen a run up. It's not at 250. It's gone from 150 rupees to 376 in a matter of just 1.5 years. Let's look at the 2-year chart here, and it's just been a vertical line. So now you could ask yourself, is that what is next? They are giving us a good guidance. NPAs are under management. NPA NIMs are going to be 10%, which is the finest in the industry. Will there be what really could be that entire breakout moment for Poonawalla FinCorp? Could it be a big acquisition? Could it be something in terms of technology? How are they looking at expanding their distribution? Because if you continue to grow at 40% plus, you need to really generate a lot of growth and manage your NPAs and ensure that when there is no risk on the book per se. So the big concern is that are they trying to bite much more they can chew, or B, this is one business which looked small. Everyone said that, okay, Poonawalla family, what are they doing in the NBFC business? Up until now, they've managed to prove the critics wrong.
Okay, those are the two stocks to look out for, Paytm as well as Poonawalla FinCorp, as are a whole lot of others. Anisha, thanks for flagging off those two stocks. But we'll take a very quick break. We'll tell you all about how your trading day and week is going to be on the other side.
Welcome back. Lots to watch out for this week. A whole host of earnings, digesting news from the banking majors, and of course the festivities galore along with cricket. Sanjeev Bhasin joining in. Sanjeev, so much to chat about. Why don't we start with the big news at Kotak Bank? What's your view on the big earnings from there, the big reshuffle, as well as ICICI Bank's quarterly performance?
Yeah, good morning. Avanne, firstly, congratulations. We beat New Zealand after 20 years, 19 years in the World Cup. So that was a lot of cheer. And you have to deal with the market volatility. So I thought the earnings of banks were very, very strong, given that there's been cost pressures and NIMs have declined. But volumes and credit growth is very, very strong. Now, there will be a school of thought which will weigh down what the performance of the new MD is going to be on for Kotak. But so Kotak could be, in a little bit of a range, I would say. There will be a school of thought which will wait for his performance and so on. But ICICI, RBL, Yes Bank, you name the bank and they've come out with the numbers which have beaten the street. I still go with ICICI. I think that is definitely one stock which is headed higher. And we'll take it from there. But on the whole, bank credit growth has been very, very superlative. And NPAs are actually on the lowest I've seen in the last 16 quarters. So I would be overweight on Bank Nifty actually as an index.
Okay. And in the next couple of days, we've got big numbers. There's Tech Mahindra, Axis Bank, Asian Paints, Reliance Industries. Why don't we get your take, given the spate of underperformance that we've seen from RIL, what the street is working with, Sanjeev?
Yeah, so we've been contrarian and we've said that this is the time to put your money into Reliance. We know GRMs are low, we know that, but on the other hand, ARPUs are very, very strong. Retail numbers are only telling you what the consumer is spending, and they're all to chemicals. I think they will come out with standout numbers there, given that they've had a fair amount of inventory, and that will add that to their margins. And secondly, Avanne, all the sum of part businesses, if you valued Reliance Retail at something like 9.5 lakh crore, then 6 lakh crore for the rest of the, sum of parts is extremely on the lower side. I still put my neck out on Reliance. Second would be Axis Bank. This transition of Citibank has now played out fully, and I think their credit dispatch numbers will again be very strong. Plus, they've added more numbers on the credit card business, and I think Axis is actually one stock which actually has been re-rated, but it can further see re-rating. Asian Paints, according to me, will have digested the price of rising crude, but it has 53% of the decorative segment, so they would definitely be able to pass on those numbers, and that again will come out with reasonably good numbers.
Okay. What about Paytm? I know you're bullish on the counter. The fact that we had the losses narrow this quarter, brokerages are bullish, and the management is talking about tailwinds as well in the next few quarters. Where do you see Paytm headed, Sanjeev? And for those who've missed the bus, is now a good time to buy?
So, Avanne, firstly, as a disclosure, Paytm is in our top 4 portfolio pick in the fintechs, and we have it in our portfolio for the most of our clients as a disclosure. And we are very bullish. We are not looking at the next 3-4 quarters, which are going to show sequentially improvement, but the next 2 years only belong. You yourself see around you, you cannot exist without Paytm. Now, there will be competition, but their NBFC, which is going to do this Kirana lending and so on, which they advised, and it's picking up stream. I think this stock is definitely headed higher, 1,500 to 1,700 maybe in the next 2 years. But who knows? The surprise can come from the numbers. And I think that the way they are expanding, the commentary from the management is extremely positive. So Paytm is a buy now. I mean, it's at new highs, but also add on declines for whatever reasons, if the weakness in the market or for whatever reason you get. But please add this stock in your portfolio. These stocks, don't weigh them from the highs or the lows, weigh them from being at a medium place where the fintech business is gathering a lot of steam.
Okay, that's the view coming in on Paytm. Meanwhile, just getting your take then on the likes of Mahanagar Gas, IGL, etc. Have you tracked these companies on the fundamental side, Sanjeev?
Yes, Avanne, and it's like calling the lion much before. We are talking of 2030. The Delhi government has always had an acrimonious relationship with the LG. And let me tell you, you don't have the adequate number of EV stations. If EV stations have to come, they will come through the network of IGL. 11% of CAG aggregators business is through IGL. And I think the hybrid model is unbeatable. It will continue. CNG anyway is the new name. It is actually diesel which you are doing away with, which is a fair point. But I think the expansion they've just got from the PNGRB, more states in Western UP, more places in around Haryana, and I think they are only going to guarantee. I think 400 rupees is a very, very good point to enter IGL. Also, you must remember that cab aggregators have enough loopholes of 20 cars and so on and so forth, which will be done away with. And I don't think anything is going to happen before the budget or the elections. This is all going to be, it's been in the talk for more than 1 year. Now, obviously, some people are forcing 2025-26 earnings. The management itself has guided that we will be in a very strong position on numbers, on volumes, on growth, and the new transition of EV charging also. So I agree that EV is a visible threat, but 2030 is miles down. I think this stock is headed first to 650, and then we'll take it. But MGL has come out with no bad news. It is just that these are slightly overrun by some of the FIs, so there could have been a panic sell-off. And on forlorn numbers of next 2-3 years, I think you should be using this decline to buy. These are very, very steady return compounders, and I see no negative as far as just the news flow, and that is all on rumors basically.
All right, fair enough. That's the view coming in. Meanwhile, what's the outlook on cement? It's been in a bit of a sweet spot. What is your expectation when it comes to numbers? How have you read into some of the large caps, etc.?
So Ultratech is the stock to watch. The numbers are very, very strong, and also watch out that now the price rise actually comes. This quarter and the next are the best for cement. And Avanne, you're missing the wood for the trees. Look at commercial. Look at roadways. By the way, another stock which is proxy to that has been IRB Infra, which has hit new highs, and it's telling you road development, commercial real estate. It's not for no reason that DLF is hitting new highs. The input cost has to be cement. So I would still put my money on Ultratech and Ambuja and ACC. You can add a Dalmia cement because of the recent acquisition of JP. Now they get a large part of the they got a large part of the share in MP. And I think cement is actually the harbinger of good times coming on both the capex and the infrastructure side.
Okay, let's also talk about Bajaj Finance. While, of course, upgrades trickled in after its earnings, and this morning as well, Macquarie has upgraded it to an outperform from the earlier underperform. They've hiked the target price as well to a good 91.90 from the earlier 6,300. So that's a very steep upgrade coming in its price target. Having said that, the stock, of course, languished after its numbers. And on Thursday, I think it was down about almost 2%. Friday, that fell by about another 1%. Sanjeev, you think one should be buying Bajaj Finance at such declines?
Yeah, good morning. So Ayesha, Bajaj Finance is the numero uno of NBFCs and powering its way through. Its delivery numbers, its raising of capital all indicate that growth and credit growth is going to be very, very strong in the coming few quarters. We all have to live in a space where these stocks are overowned by FIs, and when there is some ETF sell-off, then generally you will sell Reliance, HDFC, Bajaj Finance, and some of the others, some of the PSUs which you've seen. But I think Bajaj Finance is a pedigree stock. According to me, this is headed higher. It will drive the Nifty. That's why I think the Bank Nifty, the Fin Nifty, all those are now going to be the shoulder which were underperforming actually can outperform. So Bajaj Finance numbers and guidance and the raising of capital all bode well for their outlook. The stock has always been expensive, but I think any decline here closer to 7,500 would be the best opportunity for 2024.
Right. The other dhamaka earning today is going to be Poonawalla FinCorp, and curious to see how the street is going to be reacting to those numbers. The revenue uptick of over 62%, EBITDA jump up of 73.5%, and the PAT as well has sizably bloated all the way to 860 odd crore rupees. And Sanjeev, even the con call takeaways have been very, very positive. The management has guided for NIMs to be over 10%. They're saying that they're going to be catering to better credit quality customers. They've guided that partnership AUM will be over 10% by March 2024. I don't know if you've studied Poonawalla FinCorp closely.
So Ayesha, we had a buy on this closer to those 300, 320 levels when the initiation of the Poonawalla group was taken into this NBFC. And we know that credit has not, capital has not been a problem. Now, to guide for 10% NIMs is actually very, very strong. But given that the base is small, you can exist, these NIMs may last for some time. After that, they will plateau down. But it also is indicating how NBFCs have actually taken the case, from Chola to Bajaj, you name it, and they've been outperformers. So I think this is a perfect mid-cap to add to. Only thing is that a large part of the NIM, high NIMs will be over a period of time neutralized, given that they want to expand their business. But it is one of the pedigree stocks which is operating very, very well, and the management is extremely cash. It has no problems of raising cash and holding cash because it's a cash-rich company. So I think this is a very, very good small mid-cap to add to your portfolio. We also like in this space LIC Housing Finance, which I think will come out with very, very stellar numbers, given that their NIMs will actually start to accrete on the upside, and their NPS will fall sharply.
Okay, Sanjeev, always good to have you on the show, and festival greetings. Happy Navratras, and of course, happy Dussehra as well in advance.
Same to you, Ayesha, and to all the viewers. This Dussehra is going to be rocking. Just watch how we will flare up till Diwali.
Okay, fingers crossed on that one. Kunal, would you concur with the view that it's going to be a sparkling Diwali? Yeah, and we've consolidated already enough?
Yeah, I think we've consolidated enough. We've gone through a mature price action on the indices with respect to what's been in terms of the handover from variety of factors across the globe, whether it's US markets, whether it's the geopolitical news flow, what happened to crude oil prices, as well as the rise in gold and bond yields, etc. So I think on that front, it's been a very mature kind of a price action. Yes, we've gone back to the previous 4-month, 5-month swing lows for the indices, but then there has not been any incremental damage in terms of the index front. Large cap stocks are underperforming, and I think that's the major part of the market overweight, because I think the large cap stocks continue to underperform. We may expect the index to consolidate a bit, but the action is completely stock specific. And when you look at it, devoid of the large cap names, the mid caps, the tier to large cap, small cap names, there is a strong kind of a price action, strong follow through momentum over there. So I would believe that it's always better to go into the stock specific and the mid cap end of the market, given that the indices are not doing too much.
All right, let's say hello and good morning to Sandeep Sabharwal as well. And Sandeep, the business news which kept everyone first guessing and now everyone is assuming is the change of guard at Kotak Mahindra Bank. No internal candidate, an external candidate. He brings a wealth of experience, but something which time will have to say whether he's the right candidate or not.
I agree absolutely, because firstly, there were a large number of experienced candidates, including the interim CEO. So I'm not sure why RBI would, whether it was at the insistence of RBI or the board thought it proper to get an external candidate, that we'll never know. The second part is that the culture of Kotak, I believe, is something which is very different from an MNC, and Mr. Vaswani is largely an MNC banker. So how that culture gets translated into Kotak will be something to watch. So I would think that although a period of uncertainty goes away, another period of uncertainty possibly lies ahead, because we've seen that external candidates which come in with a very different background. We've seen that with Infosys, we've seen that with Wipro, etc. I think in Infosys, when Vivek Murthy came in, somehow the adaptation, etc., the culture they have been used to, or what is there in another large organization, might be totally different. On valuations, Kotak has obviously corrected from the lofty valuation, but it's still at a premium to both ICICI Bank and HDFC Bank, and to that extent, the valuation comfort is also not there.
So if the stock falls today and it's already been an underperforming stock, valuations are way below the historical average, or 10-15% decline, could this be a contra buy?
Yeah, 10-15% decline certainly, because on a 10-15% decline, the valuations will reach or go below ICICI and HDFC Bank valuation, and Kotak obviously has much more part of its total stock value as the value of its subsidiaries. So obviously at those levels, definitely it will become a contrarian buy.
Another follow-up question, Kotak Bank, Sandeep, is why has the stock underperformed otherwise? The name of CEO has come out of the weekend, but in last 2-3 years, Kotak otherwise has underperformed.
Because Kotak valuations, if you see, they used to be 6 times price to book, when even HDFC Bank used to be at 4 times and ICICI Bank used to be much lower. And there was no reason per se, eventually, as the asset quality of all banks improved, as some of the other banks actually grew more aggressively than Kotak. And on the CASA front, in terms of cost of funds, some banks like HDFC, ICICI, even SBI is much better placed than Kotak. So the valuation premium was unjustified, and I think that's gone away. And that's the only reason I would think that it's underperformed, because the valuations had to correct.
So Sandeep, is the pecking order within the private banks pretty obvious? Because there's a stark divergence between what IndusInd and ICICI Bank are doing, and I'm only talking about the large private banks here, and Kotak and HDFC Bank on the other.
Yeah, HDFC Bank, if you see, when HDFC Bank results came out, since they were the first ones, people were very excited about those results. But once the other banks have reported, it's clear that HDFC Bank is facing issues of its own which are going to last because of the merger, while the other banks don't have those issues. So I would think that some of the other banks could keep on outperforming. IndusInd Bank numbers are very surprising, and to that extent, it's also outperformed. And given that the promoter stake hike, etc., news is also there, so it could sustain. ICICI Bank performance were impeccable. Their provision coverage ratio and the excess reserve provisions they hold, I think it makes it one of, I think it's the safest bank per se today, both on what the balance sheet shows. And Axis we have to see, because Axis is still much cheaper than all the other large private banks. So let's see how they report. But I think on valuations, that's still cheaper than most of the other large banks.
We've discussed IndusInd Bank, we've discussed HDFC Bank. Now let's discuss Paytm. And Sandeep, they are now in a sense clearly indicating that whatever we indicated at the beginning of the year in terms of path to profitability, in terms of where our balance sheet and where our business would move, it is pretty much walking on the right path now.
I think the good part of the investor pressures on most of these companies was that they stopped burning cash crazily. And once they stopped doing that, then I think the businesses which they are running, they have improved in terms of overall profitability. The only issue with a company like Paytm is that a large part of the earnings is coming out of the commissions which they are getting out of the loans they are sanctioning. And that business cannot get a very high PE, because it's just a transactional business where they just earn the commission. And to that extent, if you look at the core payments business, etc., there the competitive intensity is increasing. So incremental improvement in performance is whatever they're guiding for. If they keep on achieving that, then I think the stock will still remain strong.
Right. Just looking at a couple of other buzzing names from Friday, and yes, Kotak actually managed to hold out by about 1.5%. Remains to be seen what it would do today. But MCX, Muthoot Finance, Berger Paints, UBL, these were all buzzers within the mid-cap end of the index, or rather the market. Naresh, just want to come to you for some of these buzzers, and MCX, UBL, Berger Paints. Any trading opportunity here?
So MCX continues to remain a buy on dips. The stock has broken out of a multi-year consolidation. After that breakout of 1800, we've seen this move all the way to 2200, 2300 band. A dip to 2200, 2150 would be a buy. So for now, it is a little overdone in the short term, but the longer term trend change is a structural one in nature. So would be interesting to watch out for dip. Berger Paints, on the other hand, it was just a one-day move. The stock saw a correction after the bonus split adjustment. So would expect some bit of a recovery towards the 600, 620 mark. but difficult to take a trade. The risk reward is 1:1. So the only name out of these names which would be on watch out is MCX.
Kunal, MCX?
In fact, Nikunj looks very attractive. The stock has gone through, after this news flow for the stock in the last month or so, I think it's gone through a different kind of a momentum altogether. Earlier, it was a bit more choppy. The stock used to see those false starts in between. It used to see those breakouts, but those breakouts lasted for just a couple of days. And we typically used to see the stock getting into a reversal. But this time around, the trends are more sustainable. The stock has seen follow-through price action. It's been a lot more stable above the 2,200 marks. So I would believe that that's a sign of change of trend as well as a sign of new trend developing for MCX. Would be very bullish on the stock.
Okay, bunch of other stocks which are going to be in focus, and there's some Vardhana Motherson as well. They're looking to strengthen their non-auto segment as well via some of small acquisitions. So that's going to be other stock to look out for. Credit Access Grameen, and there's an interesting CLSA note on this one this morning. They're talking about increasing their EBITDA estimates by 12% and to 13% rather on the back of a very strong GMV growth. So these are going to be stocks on the positive side to look out for. And then, of course, on the negative side, they're going to be MRPL as well as Chennai Petro. Remember, Singapore GRMs are now down about almost $1.50 to a barrel. So these are going to be some of the stocks to look out for on your radar. But Soumit is here. India has become a favorite globally as foreign brokerages have now been recently turning bullish as though they otherwise weren't, but further bullish. So what are the factors that are keeping them bullish? Let me take it across to Soumit and find out exactly that.
Well, firstly, it was Morgan Stanley in August when they had upgraded India's rating to overweight from neutral with a 75 basis point of weightage. Now, the reasons back then that they had mentioned was the strong FDI flows, the macro stability that we are seeing, and also on the back of the fact that they're expecting strong capex and profit outlook. They also said that the EPS, in fact, the dollar-denominated EPS growth in India would outperform the other emerging markets, and they're also saying that the young demographic profile has also been supporting the equity inflows. And now in October, they have increased the weightage of India in their portfolio to 100 basis points from 75 basis points. Before that, it was Nomura who had upgraded India's rating to overweight from neutral, and they have mentioned the reasons such as India would be one of the major beneficiaries of China plus one theme, and they're also saying that despite the high valuations that would continue to sustain given the fact that that they are expecting the political government continuity and policy continuity going forward. CLSA also is around 20% overweight on India. Now the MSCI India rating weightage is around 15.1%, but CLSA's weightage of India in their portfolio stands at around 18.2%. Now they are bullish on India on the back of the fact that they're expecting a rebounding credit impulse which will signal robust equity momentum going forward. They are saying that the energy prices are still manageable, though it is at around $90 per barrel. They are also saying that flows would be foreign flows would continue to be robust on an overall basis, and they are also saying that Indian economy is one of the strongest when it comes to the emerging market. They are saying that the valuations are largely at par with their historical averages. They are not at all expensive as per them, and they are also expecting they are also saying that foreign investors are still not overexposed to India, so that so more flows could come in going forward, and these are broadly the reasons why all foreign brokerages have turned bullish on India.
All right, from Morgan Stanley, Nomura, CLSA, across the board, as Samit highlighted, it's a stamp of approval. But let's move on then and get in a take from you, Sandeep, as to what the outlook is. Ayesha just flagged off a Credit Access Grameen, and given the kind of positive brokerage notes coming in, not just from CLSA but from Nomura as well, saying that the strong performance continues, have you tracked this counter?
No, sorry.
Okay. What's the view then when it comes to Tech Mahindra? Owing to the kind of results that we've seen from the IT stable, Tech Mahindra up next, what are you penciling in?
Again, I think there'll be stress on growth now, how they hold, whether they are able to hold up the margins as some companies have done or not will be the key thing to see. But the outlook for the IT sector across the board actually is not improving. It's in fact deteriorating. So I think we need to see in that context what they talk of.
Anything in the mid-cap IT space, when I say mid-cap IT space, I'm qualifying it, not the IT services space, which could be interesting. You got RateGain, very unique business model. You got a MapMyIndia, very unique business model. Datamatics, very unique business model. There are a lot of SaaS and product IT companies like Zaggle, another product IT company. Anything interesting? Because up until now, we've only seen IT services companies in India, more like, body shop arbitrage models. Now you've got product and SaaS companies which are coming out.
I agree, Nikunj. Unfortunately, I haven't studied most of them, but I agree with you that the stories and the outlook in some of them could be interesting because they are doing something which is very different from what IT companies earlier used to do.
I like to draw everyone's attention to Bajaj Auto, and we don't realize it, that you compare Bajaj Auto versus Hero MotoCorp. I mean, there is a stark difference here. Compare Bajaj Auto with TVS, again, there is a stark difference there. Bajaj Auto this year, can you believe it? Hello, 50% higher. Throw in TVS, last 1.5 years, it has hit out of the park. Hero Honda or Hero MotoCorp, I mean, there was Honda. If Honda was there, the problem would have not been there, trust me. Hero MotoCorp right now is languishing at the bottom of the pyramid. Sandeep, two stocks have done well from the auto space. One is Tata Motors and the second is Bajaj Auto this year. Stocks which have underperformed last couple of quarters, Maruti and to some extent Hero MotoCorp. Could it reverse going forward?
I would think that Maruti should do well, but whether Bajaj Auto and Tata Motors suddenly start doing not well is unlikely. I think Bajaj Auto is one of the most credible managements in the auto sector, and they were properly guiding when the slowdown was there, when they were suffering on the export front. Everything they guided the investors properly, and this time they have actually turned quite bullish both on domestic growth, exports, three-wheelers, as well as holding the margins, etc. So I don't think there's any case for being negative on Bajaj Auto per se.
Kunal, you think the momentum is going to be now tilted towards Bajaj Auto, or would it be a bunch of these two-wheeler names that TVS will continue to hold out, as would Bajaj?
I think Bajaj Auto should continue to do well. The momentum is behind, behind the stock. The stock is done reasonably well. Even the last 2-3 months, it's picked up good price action from that 5,000 or sub 5,000 levels earlier to a breakout above that 5,000 levels. Of course, Friday's day was quite strong for the stock in terms of the momentum. But I also believe that there are many other names in the auto pack which are also looking fairly attractive. So not just from the two-wheeler pack, but from the four-wheelers, I think Maruti is something which I think about that breakout of 10,000 levels has now become it's a change of base or a change of range for Maruti. Earlier 10,000 was a huge resistance. The stock took, I think, if I'm not wrong, 5-6 years to break past about the 10,000 levels. Now that is acting as a major support for the stock price, and I strongly believe that this could probably be a good base for the stock at levels of 10,000, and you could probably expect the stock to head significantly higher. So that's another name from the larger cap space which looks fairly attractive from a medium to long term play.
All right, checking in on the pre-open rates, just about coming on your screens this morning, and for now it's holding out mildly in the green for both the Nifty as well as the Sensex. Let's get in some mid-cap trading strategies. What is it that our chartists are picking out within the broader universe, Naresh?
So that would be a buy on CRISIL Limited. The stock has been sideways for quite some time and now finally broken out. In the last few sessions also, the stock went up to 41, did a retest, and now into fresh 52-week highs and all-time highs. So a strong trend here, consolidation done for many months, as well as the top in 2022 was around closer to 3,800 mark. So it's not done much for the last 12 to 18 months. Expecting this to continue towards 4,700, stop loss at 4,000.
What's your mid-cap list looking like?
There'll be a buy on Dixon Tech. Have been bullish on the stock earlier. I think from the previous breakout points of 5,200, the stock has moved up another 300 points. Still looks very attractive at current levels. Would look out for a near-term target of 57.50 for Dixon Tech and stop us at 53.75.
Sandeep, before we let you go, your take on... All right, here Sandeep has left, so let's move right on then. Shift gears to some of the other top stories that we're tracking on the channel. And the ongoing conflict between Israel and Palestine's Hamas has ended its 17th day now, killing over 6,000 people on both sides and injuring thousands of others. While a second batch of UN aid has entered Gaza, Israel has continued with its offensive against Hamas. Meanwhile, the White House has emphasized that the US was bracing for the Israel-Hamas conflict to intensify, possibly involving Iranian proxies. And India's Operation Ajay to rescue people from the war-ridden Israel continues. The sixth flight has landed in the national capital from Tel Aviv on Sunday night, carrying 143 passengers, including 2 Nepalese persons. Operation Ajay was launched, remember, on the 12th of October to facilitate the return of Indian nationals who wish to return home amid the ongoing war.
And Delhi welcomes unwanted guests as pollution tags along with winters. Delhi's air quality has deteriorated once again to very poor category, with the air quality index, or the AQI, showing readings of 300 and beyond. Environment Minister has called a meeting over deteriorating air quality in the national capital once again, as is the case with Mumbai. And in a recent move for tourism push, Uber will now let users book hot air balloon rides over Turkey's tourist Cappadocia region, which comes as a company's push to expand from taxis and ride-hailing into wider travel and tourism as well.
All right, and as we're stepping into trade, Kotak Bank is going to be on everyone's radar, largely on the backdrop of the new appointment of the MD and CEO Ashok Vaswani at the bank. What exactly does this mean for the bank? Will the stock market participants react? Let's hear out and revisit Nikunj's take.
From last 1 year, there was speculation that there were 2 internal candidates and there was 1 external candidate. The choice of an external candidate, so the bank had given 3 names to RBI. RBI ultimately gave the final verdict or the final decision. The question you would ask yourself is that why there is no internal candidate and why an external candidate? So Kotak Mahindra Bank, in a sense, is a bank which is built on trust, great risk management, supreme customer satisfaction, and great adaptation of technology. Can Mr. Vaswani really take it forward? And was there no one internally which could have really taken the baton from Mr. Kotak? So in the near term, we've seen that even a bank like HDFC Bank has suffered. Markets know that the CEO at the top matters. A case in point here is the Chanda Kochhar era versus the Chanda Kochhar era for ICICI Bank versus Mr. Bakshi's era. So the CEO and the managing director of a bank, irrespective of what the lending practices are, does matter. So now markets would be curious, some would say anxious, to understand that how the migration would move. Uday Kotak has built a franchise, an unforgettable franchise from an unknown franchise to an unforgettable franchise. Can Mr. Vaswani do the justice to him? And that will be answered in due course of time. And that, in a sense, will inject this extra element of uncertainty. Both in terms of the FI positioning and also in terms of market positioning, the stock is not really in any kind of a momentum groove. So while markets and institutional investors will take their time to digest, in the near term, I think Kotak Mahindra Bank, the underperformance, I think will just become more and more stark and more real. However, I don't expect a very sharpish kind of a reaction simply because the stock has become cheap. It is trading at valuations which are pre-Allen FS. And then, so I think the sheer valuations and the sheer underperformance in Kotak Mahindra Bank, I think in a sense, will restrict the downside. But everyone thought that it's going to be an internal candidate, and that internal candidate will just mark continuity, and that whole concern of succession planning would be over. Now markets would say, okay, we're not saying no, but we need to examine the new external candidate. And then the question is that why was the choice of an internal candidate really rejected? These are questions which are genuine questions. Time will answer. Can Mr. Vaswani make Kotak global? That's the experience he comes with. Because ultimately, Mr. Kotak has chosen somebody who understands his DNA, who understands his lending culture. But markets will take some time before that convince. So in the interim, the stock which is underperforming will continue to underperform. And when you see delivery coming out in next 2, 3, 4 quarters, that's the time I guess you would actually see the market revisiting this whole handover thesis.
Okay, let's move on. And before anything else, let's just see what the pre-open rates are looking like. For the index, it's going to be a tempered one. But I want to see what Kotak Bank is up to before we move on and talk about some of the index ideas as well this morning. Kotak Bank actually has started off flat, so fairly resilient. Remember, Friday, ahead of the numbers, it was actually one of the top gainers on the index. In fact, the top gainer on the index in an otherwise weak market. Right now, it's started off flat in trade. And quickly check in on ICICI Bank as well, and then Paytm, of course. These are going to be some of the buzzing stocks to look out for. ICICI Bank 1% higher in trade. But what about the index strategy? What our chart is betting on is the consensus on the street when it comes to the Nifty calls this morning. It's a buy on dips from Kunal and a hold from Naresh coming in. So pretty much a status quo on the Moodometer. For the Nifty Bank as well, a buy on dips from Kunal and a hold coming in from Naresh.
Well, what can I say? Markets are markets. The stock of Kotak Mahindra Bank, which everyone was of the view could be in for a tough Monday morning, the stock actually is flat. These are pre-open rates. They could actually adjust. IDBI Bank, nothing on disinvestment, but numbers surely are decent, so that will keep the momentum going. In credit access, I think let's come out with a decent set of numbers. Let's also throw in Poonawalla NBFC here, just to see that Poonawalla FinCorp and 382 rupees. It's not a bad start, Kunal. I mean, we had a poor, the week gone by was not exactly very exciting. The handover from global markets is not that great. Kotak Mahindra Bank on the wrong side of news flow, and we could be in for a flat start despite all that.
Absolutely, Nikunj. And I think I've been saying this time and again over the last few days that the markets have given a very mature kind of a price action. The indices, it's managed to digest a lot of negativity in terms of news flow, events, etc. And we've still largely remained to a range. So even if you look at the incremental damage or incremental range for the index in the last 1 month, we are still into this band of 90,300 to 90,700. So when we try to digest all of these news flows and the index still remains into a trading range of 400, 500 points on the Nifty, I would still call this as a very strong action from the indices.
Viresh, the handover was not exactly very kind and conducive, yet the market positioning is very different.
So that's been the case. So if you look at the way Indian markets have done compared to the global markets over the last 2 weeks, 1 month, 3 months, 6 months, we still have a strong relative outperformance, and it should continue going forward as well. So in the US markets, we've actually seen a breakdown in the mid-cap and the small-cap indices over there. We are at breaking March 23 lows. And out here, we've actually are closer to a 52-week high and an all-time high on the small-cap and the mid-cap index. So kind of times where one is clearly seeing outperformance, and this could continue. This could be a condition which would continue for maybe months and years together.
Just looking at a couple of other buzzers, while Kotak Bank definitely is the surprise pack today and it started off fairly quiet, it's the resilience, I think, of the Indian markets at a time when you've got a weak handover coming in from the globe. Remember, on Friday night, you had most global equities real under pressure. In fact, the US equities were down anywhere between about 0.8 to about 1% apiece. Nasdaq, I think, had a sharper fall. Asia this morning too. It's a sea of red all across. About 0.5% to 1% is the kind of cut that you're seeing across the board. In fact, Japan is down about 250 points right now. China is down a good 1%. Hong Kong as well down over 100 points. And there you have the Nifty absolutely flat for itself as we speak. Kunal, we've talked about the Nifty resilience. A, will the resilience continue? B, how much higher could it take us? And do you think the broader markets will continue to, in that sense, outperform what the benchmarks are doing?
Ayesha, I think Friday's selling was more of mid-caps and stock-specific because I think for the first time, the Nifty mid-cap index had come back towards its 50-day moving average as a retracement. Now, this is something interesting because over the last 1 month, we've seen that the mid-caps have been on and off in terms of price action. Small caps had made an intra-month high or a had broken past about the previous highs, but the mid-caps were the ones which were going into a bit of a struggle. So I think that mean reversion process for the mid-caps also seems to be now behind us. The Bank Nifty has come back towards the 4-month, 5-month swing lows. The Nifty is again trading into this band of 400 points. So when we try and add up all of these factors, it indicates that maybe the market action is getting into the mature part where we are looking out for more of a risk-reward trade over here. So what we are expecting is that even in case if the index drops down another 200-300 points, but that could be the bare minimum for the indices. But on the upside, we should be looking at a retest of the previous highs of 19,800 at least, as well as a break past about the 20,000 mark. So my sense is that from a short-term trading perspective, the risk reward is extremely favorable to initiate fresh longs.
So a new high before Diwali is not like it could be a realm of possibility.
I don't think so before Diwali, but I think post Diwali we should be clear of hitting a new high for the indices.
Okay. A minute to go. Let's recap Kotak Mahindra Bank. Let's recap ICICI Bank. Laurus Labs numbers I think came on Friday during the market hour. The stock was volatile, but must be adjusting to all that FNO here and there. But ICICI Bank 1% higher. Laurus 12 rupees lower. Look at Paytm. Checking on JSW also came out with their numbers. So Paytm flat numbers exactly in line with what everybody expected and anticipating. But later this week you've got Tech Mahindra. Later this week you will hear from, you actually would hear for Reliance I think on 27th. So these are two important numbers. I mean nobody is expecting anything big from Reliance given that GRMs have collapsed completely. GRMs I think at $1.50 or something. And $1.50 for GRMs when crude going higher. So either crude has to go lower or GRMs have to go higher. Which means that crude, if it is going higher without the support of GRMs, that just tells you the demand for petroleum product is not strong. This is pure financial speculation, which is taking the markets high. So the underlying bent of crude demand, I think, is not exactly very high, and that is something which is worth considering. So it's going to be a okay start. We've done rather well for ourselves in a shaky global environment. Things have been slightly sticky. And if you've done, we were down by about 1%, up on the small cap index, just down by about 1.5% for the mid cap index. That's par for course actually, I guess. First rates, it's a truncated week. And the first rates are 21 points lower for the Nifty. The breadth is in favor of advancing stocks versus declining stock. The Bank Nifty up 45 points. Now let's look at Kotak Mahindra Bank. Yes. Reaction? Well, markets are saying one uncertainty on succession planning is over. Another one which in terms of delivery will start. Stock is cheap. So the fall is not a very meaningful one. So 29-30 rupees lower for Kotak Mahindra Bank, which frankly nobody is going to be even talking about it. That's like just a result reaction. ICICI Bank and Paytm, two other stocks which are worth revisiting in terms of where the market is. And ICICI Bank up by 1% and Paytm down by 3 rupees. And Laurus, which I think came during market hour on Friday, the con call must have got over and now markets would be digesting those numbers. 396 rupees for Laurus Labs.
There's RBL Bank as well, where the NIMs have improved to 4.9%. The gross net NP ratio is now at a 16-quarter low. A nice move of about 1% and counting higher for RBL Bank as we speak. L&T Finance also came out with its numbers. The Q2 numbers are above estimates. NIM at an all-time high. That stock is well holding out marginally in the green as we speak. There's also JSW Energy. The margins have come in, expanded quite a fair bit at almost touching 58%. 4% is the gap up move that you're seeing on this newly listed entity. Revenues as well higher by 36.5%. There's Balkrishna Industries also, wherein there's been a fair amount of margin expansion to 23.6%. That stock though starts off a little bit tempered, 1% lower as we speak right now. Paytm, Nikunj was just flagging off that stock. Let's check in on what that stock as well is up to right now in trade. Decent numbers, but no, the stock is lower by about almost 1.5%, or rather 1% as we speak. IDBI Bank as well, the asset quality has seen an improvement, so that's another stock which should be starting off in the green. Yeah, surely it is, up over 2.5% as we speak. There's also Poonawalla FinCorp, blowout set of numbers there, NIMS expansions, AUM uptick of about 54%. There's also Central Bank, wherein the asset quality has shown a sequential improvement. That stock also higher, marginally albeit. Credit Access Grameen, NIMS at 13%, AUM uptick of 36%. There's J&K Bank, a significant asset quality improvement on a sequential basis. NII uptick of nearly about 11%. J&K Bank holding up 2.5% as we speak right now. So lots of earnings and a lot of positive news flow. But amidst that, of course, there's Oberoi Realty as well, wherein the Q2 booking value has come in down by about 20%, and the units booked as well in this quarter, while they of course showed an uptick on a year-on-year basis. Yes Bank below estimate numbers. Finolex Industries, again a disappointment there. Amber Enterprises reported a loss. EBITDA is down 62%. There's Goa Carbon, again weak numbers there. Suntech Realty and EBITDA loss versus profit. Sasken Technologies, EBITDA down 52%. So it's a bit of a seesaw out there, as is for the Nifty, which is absolutely flat, Nikunj. But Kunal, the first trades that you're punching in.
Yeah, so I think Tata Motors could be something which looks interesting. The stock is at 660, 670 zone. It's been a breakout point for Tata Motors, so that's something which I'll look to trade at the open.
All right, that's Tata Motors punching in the first trade from Kunal. What about you, Naresh? What's looking good?
So continued like CRISIL as a short-term defensive bet, the stock could go towards 4,600, 4,700 levels. So buy at current levels, add more on dips.